Let's have a look at Airbnb, which did just post its highest revenue and most profitable summer quarter on record, but it's the forward-looking guidance and perhaps the amount of people that are booking that is the concern here. They saw in the previous 3 months, ended in September, the nights and experiences booked just a little shy of expectations, coming in overall at 99.7 million, and it's the forward-looking guidance that perhaps doesn't quite live up to the hopes. Of course, a dollar and a move back to urban areas means we're spending a little bit less on each individual apartment or place that we rent. Let's dig in with Mandeep Singh, Senior Technology Analyst at Bloomberg Intelligence. They talk about sort of a choppy macro environment, and this is sort of the new normal they're having to get used to, right?
Well, so Airbnb was one of the pandemic winners, right? People weren't able to travel anywhere, but they were able to use Airbnb for domestic travel. So I don't think macro affects Airbnb that much, given the resilience we have seen during the pandemic. But look, in the case of Airbnb, one thing that stands out is their room nights are up about 20% compared to 2019 levels, but their bookings are up 50%, which shows you that they had a very nice pricing tailwind. ADRs, average daily rates, were up almost 40%. Now that seems to be slowing down because guess what? Hotels are coming back. Pricing isn't going to be that big of a tailwind as it used to be just because of the supply-demand equation in terms of lodging inventory, and that's what we're seeing.
What does the revenue growth story look like longer term? Because, I mean, there's obviously a material slowdown. This was a company that, when it came to market in late 2020, it had quarterly revenue growth of like 70, 80%. We know that's come down now. But when you look out forward into next year and beyond, most of those numbers are like 10%, 11% based on the analyst consensus here. Is that the story?
And that is the long-term growth rate of travel. Think about, the travel industry, 1.4 trillion. It grows mid-single digit. The online part of travel grows about low teens at best. So in this case, Airbnb really created a new category, alternative accommodations, that added to a lot of inventory, and it really worked during the pandemic. I mean, this was the business model that actually worked. All the other online travel companies, Booking, Expedia, really started to double down on alternative accommodations. But I think, again, the problem is, one, Airbnb has to maintain that consistency and the quality of experiences to drive repeat bookings. And it's a profitable business model, but I don't think they're taking share from the online travel guys anymore. The hotels are coming back, and they are kind of maintaining their share here.
They say in their shareholder letter, guest demand remains strong. They're talking a lot about that non-urban live and work at the same place, but they are talking about a return to the big urban travel environment as well. How do you see that as a growth story, and if that is not being translated to investors right now?
Well, so think about, the long-term growth will be driven by unit growth. So room night booked is the key metric. It takes out all the pricing aspect of it. And if the room night growth is, low teens or mid-teens, that is how you should be thinking about, modeling Airbnb's top line. Pricing was a nice tailwind during the pandemic. It will fade. It's that obvious because of the supply-demand equation. And in this case, they had unique inventory for a while. For a while, you could only find things on Airbnb and nowhere else. Guess what? That uniqueness may be going away because that inventory is available on Booking and Expedia.
Yeah. All right. A look here at Airbnb shares down a little bit in after hours, trading 6% here on the potential slowdown there in some of those bookings going forward. Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence.